You have heard politicians talk about universal health care for several election cycles now, and may have not paid much attention to it. Well, it's time. We'll try to make it simple. Many of us thought that health care would be free. This is not the case for the vast majority of Americans, and probably none of us in the room here today. We may have thought it would be affordable. Well, you'll see that the term affordable was chosen by the politicians. Health care will be a major item in your personal family budget now and in the future. So here's the straight scoop. It is our objective and that of your employer to minimize the financial impact of this legislation and still give you valuable coverage for medical expenses. You do have options. You may want to jot down some facts that apply to you. The Affordable Care Act requires all Americans to obtain minimum essential health care coverage, qualify for exemption from coverage, or make a penalty payment when filing their federal income tax returns. The following types of health care insurance meet the individual responsibility requirements. Coverage purchased in the federally facilitated marketplace, the dreaded official website, government-sponsored coverage such as Medicare or Medicaid, and coverage under an employer-sponsored plan, which is what we will present today. Here's the good news. Your employer offers all regular full-time employees a comprehensive ACA-compliant health care benefits package that includes a range of options to meet your needs. This meeting kicks off your official open enrollment period as mandated by the PPACA legislation. You may have heard of it referred to as Obamacare. If you focus for the next 30 minutes, ask questions, and make some decisions for what is best for you and your family, you don't have to worry about it for the next 12 months, and you'll be covered and compliant. You can choose from several benefits meeting your individual needs, and you may change the choices that you previously made. You may also choose not to participate for the upcoming plan year and pay the penalty when you file your tax. You are only eligible to change your coverage options during this open enrollment time, or if you have what the IRS interprets as a qualifying event. Why is the open enrollment period the only time that employees and dependents may enroll, drop, or change coverage? It's not up to us, and it's not up to your employer. The IRS sets the rules here because premiums for your benefits coverage are taken out of your check before taxes are calculated, increasing your spending income and reducing the amount you owe in income taxes. Plans like this that pre-tax benefits must follow Internal Revenue Service tax laws. This law requires that once benefits are elected, you must stay in the plan you selected for a full plan year. Here's what the IRS considers a qualifying event. Your legal marital status changes through marriage, divorce, legal separation, or marriage annulment. The number of dependents goes up due to the birth of a child or adoption of a child. The number of dependents goes down due to the death of a spouse or dependent child, or if someone moves out due to marriage, etc. Or loss or significant change in employment causing drastically reduced ability to pay. You will need to act within 30 days of the qualifying event, and you'll need appropriate documentation. The Benefits Department will help you determine if your mid-year change request is permitted, and if so, changes will be effective on the first day of the month following the approved change in status event. Now let's talk about your health care options. Your employer offers a choice of medical plans. You'll be going over these plan options in the following Q&A session. All plans save you money when you stay within your provider network. This gives you fixed copays and negotiated rates for common services. There may be reasons for you to go out of network, but it will always be more expensive. It is, however, still an option. You are also responsible for any expenses above reasonable customary rates. The amounts considered appropriate for services provided in your geographic area according to the insurance company's guidelines. Amounts over the reasonable and customary limit are not considered covered charges and are not counted towards deductibles or any out-of-pocket limits. A question you may want to ask in the following session is, how extensive is your in-network provider list? In most cases, it is very adequate, but varies based on location. Enrolling is easy, but admittedly is a bit of a hassle. You will be provided with enrollment change form. This form is an insurance company form and is required whether you are electing coverage, making a change to existing coverage, or rejecting coverage. All full-time employees must complete the enrollment form in full. A few points. Please be accurate and legible. We have to read what you wrote. And employees cannot be added or dropped from coverage without this form. Form number 2 is the election form. This form authorizes your payroll deduction and is required for all employees new to the plan or making changes. You will also receive the Uniform Summary of Benefits Coverage. Under the Affordable Care Act, this is a notice given to employees about their benefits. Most questions we can answer, or we will find the answer for you. For questions about coverage, dates, and deductions, contact Human Capital Strategies, our benefits department. Human Capital Strategies, in partnership with your company's owners, search and negotiate to bring you the best coverage at the lowest prices. This is a full-time job, but it pays off by containing spiraling costs and growing deductibles. Our allegiance is to you, not to the carriers. We are on the same team. Call us for any help that you need. The balance of this benefits meeting is for you to ask questions and become comfortable with the choices you will make. There is a deadline for completing this form, but you won't be rushed in your decision.